Welcome back, Zach Manis. Hi,
Thank you,
Zach.
Dale.
How
Good
are
to
you?
be back. I'm great.
Yeah, not, great to have you here again, Zach. So here we are in 2023. What's top of mind for you
Um,
halfway through the
Probably
month?
wanted to touch base with you on the broad market and then maybe get into a few more specifics.
Okay,
Um,
you want to share your screen, buddy?
yeah, let me jump over and do that.
So the downtrend line from last year that the whole universe is watching. We had a false breakout a few months ago. We backed off from it again last week, but the pullback last week didn't seem to have much momentum to the downside. So,
Right.
yeah,
So
okay,
the last time I was on with you was back here at the beginning of October, and
yeah,
we were looking. So this actually back here at the end, this is a chart from October, like the evening right before I was on with you. So we
okay,
wanted to see more of this B wave bounce. And again, we use Elliott wave. So looking at potentially a much more significant top having been struck in the market that could last for a number of years and maybe even a decade or more in terms of a larger correction, but not without some pretty big bear market rallies. So looking for that intermediate degree, more of that B wave bounce, even though there is some potential, certainly at the time there was some potential that a few things could be more bearish. Right after I was on with you guys, we didn't hold the initial support from that first move off of the beginning of October and dropped down mid-October to a nominal lower low. And it seemed pretty nominal at the time. I mean, it wasn't a severe extension. But at the same time, I think it was enough that it made more sense to count 5 waves down for a slightly larger A wave and look for that B wave bounce to completely restart, as opposed to counting that as the B wave low inside the B wave, just restarting from there. So that's what we've been looking for since October, and got a nice move up off the low.
right.
Into that tangle of the moving averages that I think I chimed in a couple times with to your show that you guys were looking at, and I was expecting potentially more of a retrace, and I was open to this bounce that we got here being just a corrective bounce inside a bigger B wave here, to heading down closer to the 3600s, and that
Yeah,
is still a little bit of a risk. But when we zoom in, we look at everything by degree. And when we look at the structure off this low, as well as, the collection of all the sector ETFs and
it
individual
was five,
stocks,
huh? It was five.
yeah, it really looks like it can count as 5 waves up, particularly in like the semiconductors.
Hmm.
That looks really, really strong. And that was one of the areas that Garrett and I were highlighting. So, we're really looking for support to hold here, and certainly the December lows, to head up towards the 4400s in the first half of the year. Maybe even happens all of it in the first quarter, or at least maybe just into April. But not relying on that getting to new nominal higher highs.
Okay,
We're
and
not
that's what,
opposed. Yeah, go
46,
ahead.
Zach? Is that the number or 44?
Um,
46?
I'm looking for the 4400s to be pretty
Okay,
significant resistance.
okay,
I mean, I might be following up some trailing stops on things and
yeah,
scalping moves higher if it doesn't start to clearly reverse from there. But I'm not going to be relying on this getting new higher highs. Garrett and I
got
did
you.
put out a list of some bigger, like larger caps and mega caps that do make stronger arguments for being able to head to new highs above what they hit in January of last year, or some of them topped so far in like November or something. But
Okay.
really not focusing too much on whether or not the market makes higher highs, but allowing for it.
So a lot of people were looking for exactly, it actually bothered me. The consensus view was we take out the October low first quarter and then we'd be okay and get a good rally. And what you're presenting is more like sell in May and go away
Yeah,
after
I think if we break down, I mean, we can tolerate more of the smaller degree. If this wasn't exactly 5 waves up, then we can certainly get more of a wave two here.
Okay.
or an alternate B wave into the 3700 region, maybe even dipping into the 3600s a little bit.
Yeah.
Under 3600 and certainly under the October lows, I think it's a chain reaction and negative feedback loop, slippery slope that everything starts to fall apart. And this top and this top were far more significant in terms of all of that B wave bounce and maybe even a 1-2 start to the C wave down. I don't think most of the things that we look at argue that way. There's a few stocks that we're bearish on, but for the most, and maybe some sectors like XHB could be viewed in a more bearish light, but even it's
What's that?
trying.
Home builders?
Yeah. Even that's trying to get more of a corrective bounce. So, I think it's important to have a good perspective of the overall risk that, the good times are over, and that last January was a far more significant top in the market for all practical purposes, and to be prudent about that approach. But in the meantime, at the intermediate degree, this is very, very tradable swing. You just need to start be looking for the exits, as you start heading into that resistance, and, having those plans as far as raising your stops, raising cash, starting to build some hedges. And even, Avi just launched a new banking analysis service where they really delve into the nitty gritty balance sheets of a lot of banks to see which ones are really safe to keep your money. Because when you really zoom out, we had looked at that bigger macro chart before when I was on, the magnitude of this correction, that can be starting, whether we get a new one more high or not, is pretty significant, and of a similar magnitude or even one order of magnitude greater than the dot-com bust in the 2009 crisis, which were the A wave and the C wave of this bigger cycle degree wave 4.
So
So
don't buy the narrative that U.S. banks cleaned up their balance sheets and they're all very strong, and we don't have to worry about a solvency issue with U.S.
No,
banks.
I was actually listening. I just started working through Cautionary Tales with Tim Harford. It's a great podcast. And I started at the beginning season. So I just listened to one where he talked about algorithms, and it was about the AIG and using this black box to predict, what they thought couldn't happen or was going to happen. And not relying on those predictions. And I think that there's a lot of that it may not be mortgage-backed securities or credit default swaps exactly, but certainly consumer debt is at crazy highs, and there's a lot of leverage. There's a lot of reliance on indexed ETFs that magnify all of the effects of everything in the market. And there's a lot of just people just putting in money that that those increase the concentration in 5 big names, and so it doesn't take a lot for everything to enter into those vicious feedback loops.
I also saw a piece from a couple of great analysts and traders I know that talk about that the shadow banking system is larger than the above ground known banking system. And illiquidity building up there could be the catalyst.
Exactly. And I think,
Is Avi talk about that too? Shadow banking?
Not as much.
Okay.
He's much more of a, what is exactly shown on the price pattern that everybody can see. But,
okay.
We take a look and try and look at the dark pools and see, a lot of that, does eventually make its way to the regular tape. It's just, sometimes a delay.
Okay.
But one of the other things that I wanted to point out is, we're looking at things based on sentiment. And I think the sentiment right now, I think some people are a little bit more cautiously bullish. Maybe people are looking for more of a consolidation of retest before we swing higher. I think once we start to get over the 4300s and into the 4400 region, it's going to flip all the way back to people think the worst is over, the recession's behind us. It's pedal to the metal bullish again. We're going to break out to new all-time highs and keep going. And that's
Great
where things
point.
get really treacherous and dangerous. And it's going to be very hard for us traders not to get swept up into that emotion. You know, you're going to see a lot of back patting and high fiving and
Yeah,
stuff, and it's going to be hard to start to pull out and start looking, you know,
the
at
other way.
opportunities to go the other way, because
Yeah.
it's going to seem like a runaway freight train.
Oh, well,
But
they're
you
going to
know,
call it a breakout if you just draw the obvious downtrend line that we just
exactly.
came off of last week. That, you know, they're going to say we're on our way out right after that.
Right.
Don't you think?
Right.
Okay. All right.
So
So go ahead.
a couple of sectors that I wanted to take a look at. Financials. A lot of them have a very, you know, a lot of them have the same structure, more or less, off of, you know, down into October lows and then off of those lows with just some nuance differences. And those nuances, you know, give us a little bit more, you know, peek behind the curtain of where a lot of the strength is coming. You know, this was a much more shallow consolidation for the B wave into the December lows. So we were more open to a wider flat playing out, but showed even more strength with this move off of the December low, looking like 5 up and holding a pretty shallow retrace. So again, could get more of that smaller degree wave 2 if this is just a B wave here and it fills out as a wider flat, but certainly doesn't need to. You know, we can break out over 36.25 and start heading up towards the 40 region in financials pretty quickly.
Is Goldman included in the XLF?
I don't, not that I know of. I
Okay,
mean,
because I
if it
mean
is, it's a pretty small percentage, because I mean, a
okay,
lot of
because
it
I
is
mean
Goldman.
it really took a hit and the XLF held up great. So
Right.
I was just curious.
Oh, you said Goldman?
Goldman Sachs.
Oh, yeah. Goldman, I think, is certainly a pretty big component.
Okay, well,
Um,
I mean, look at how well it held up in the face of Goldman.
right.
Take, you know,
Yeah,
that's
especially that recent drop, which, you know, really, you know, we're looking at Goldman's one of the ones that we think is not just a B wave bounce, that it can actually still press on and make higher highs.
wow.
But
Okay,
looking at that as an ending diagonal pattern, so that's where all of the subwaves are corrective structures, and usually your wave 2 is going to be wider, to give you a stronger base, you know, so that those trend lines can be a little bit more parallel. If I add the trend lines here, show the trend lines. So if we get even a little bit deeper and wider on that base, then we can have more parallel trend lines, or even contracting a little bit to fill out the rest of the diagonal structure with all the ABCs.
great look.
Um,
Surprising, but great look.
And so I mentioned SMH. SMH was one that was one of the areas that we were looking at as being, you know, it got hit really hard
Yeah.
with that first move down. One of the ones that more clearly needs to count as 5 waves down. But that means that even though we're not looking for higher highs, the percentage swings for the first move off the lows and also the C wave of that larger B wave bounce can be pretty good magnitude moves. So looking at least
20,
for the
30%.
260s, yeah,
Yeah.
and really the size of this is wave 1, really pushes this much closer up here to the 764 fib retrace for all of the B wave. So we get to move this up a little bit higher to the 100% of C, and then probably head up closer to that 280 region. Again, this really strong looking 5 waves up off of that December low for SMH, the semiconductors, but too shallow to rely on it and say, all right, that small little retrace is all of the wave 2. So our default needs to be, you know, count that as an A wave and a B wave, look for another touch of the 200-day moving average in that ideal fib zone of the 382 to the 618, but that top of the region, and you have the 200-day and the 50-day coming in to meet each other, and then going from there. But much over the 234, you know, really 232 region. And this is probably, you know, you move that wave 2 to here and you're already in the 3rd heading up.
Okay. All right. So,
another area of
go ahead.
What was that? Sorry.
Well, I was just going to ask you because, you know, prior interviews, you guys were talking about gold shares, which you and Garrett were really focused on, and the miners have done tremendously. I was just wondering if they're a little bit overdone up here.
I
But
think
we could
so a
go
lot.
ahead.
No,
Okay.
we'll shift gears and go talk about
I mean, that's what's on everyone's mind. I think we have, sentiment and the DSI on gold's 90. I think we've been to 90, and it's been one heck of a run. Oh yeah, so
right,
the comparison charts of gold to the
right.
market. Yeah.
So this is SPX priced in gold terms,
Hmm.
and have been looking for this to be heading in a downward motion. And that really, again, with ratio charts, I post these for my members, and my members are always saying, well, what does that say about the direction of gold? I'm like, well, it's a ratio chart. It doesn't tell you exactly what direction gold's going to do. It just says that relative to the other instrument, one is going to be outperforming or not. So,
Right.
this says headed trending down for the SPX priced in gold terms means that gold should be outperforming the S&P in over the long term, over the next several years, heading down in this larger degree move that I think is filling out as this larger ending diagonal down. So because this is a 1-2 and we have what looks like an A wave down inside the 3, we are looking for a corrective bounce as a B wave inside this ratio chart. So
Okay.
that could be some short-term strength in the S&P. It could be some short-term weakness in gold, or some combination of both, for that ratio to head up towards the 217, 220 region, where you have some of that resistance again. So maybe it gets a little bit more of a drop first, but looking for some consolidation there to take a couple months, at least move this chart sideways, and allow it to set up for that next drop, which would probably be more weakness in the S&P and more outperformance in gold.
Got it.
Gold itself, just got to find a clean chart for you. Here we go. So looking for that to head to new all-time highs, probably up into the 2,500. Maybe that move gets one of those kind of classic blow off top type rallies at the end, and takes it up closer to 2,700. But look pretty close to completing the initial move off the low. In an ideal world, if it's going to get 5 waves up, it gets a 4th wave and then a 5th wave, at least nominally higher, towards 1950 just to maybe 2000. And then it gets a bigger consolidation, maybe into the summer. But there is potential that I've been showing with our subscribers where we're getting one of those ABC moves up for all of the wave 1, and the entire structure fills out as a diagonal. Which makes, sometimes that kind of pattern frustrates people. I think if you can expect it and anticipate it beforehand, all of these A's and B's just give you more linear movement to make trades back and forth, and not necessarily just relying on an impulsive move that's quicker and sweeping to the upside, but gives you, a lot more bites, kind of like an omakase tasting menu, if you will.
Okay. Thank you for sharing that.
And similar on GDX, that we're looking at, most of this move to the upside is done. Again, you can squeeze in 5 waves up here for all of wave 1. So I go to my primary chart, I have that on there as a yellow wave 1. And so instead of getting just a wave 4, you get A, B, and C of the wave 2 off of this high. Maybe we can squeeze a little bit higher in the short term, but really want to see some consolidation and building a nice base and inverse head and shoulders. Here would be really great if you
Where'd
could.
that come in? Around 27-ish?
Yeah, I think I would love to hold the 28, 29 region, then get one more push up towards 35, 36, and then come back to 28, 27. I think that would fill out as this bigger inverse head and shoulders really nicely. And looks really good on GDXJ as well. But again, if this is easily, when you zoom in here, you can easily squeeze in 1, 2, 3, 4, and 5 waves up. So instead of just getting a 4th and a 5th wave and then your wave 2, you could just get that ABC for all of wave 2 here and then take off. And maybe it looks a little bit, maybe you get a wave 1 of 3 and then a little consolidation is wave 2 of 3, and then you take off from there. But I definitely, if we get a little bit more than the 28 region on a retrace, then I'm going to look at that more as this wave 2 instead of just a 4th and a fifth
Okay.
for wave one. But yeah, we definitely like the metals a lot, and a lot of the individual names are good. I think
Okay.
platinum is showing the best signs of starting this consolidation already.
Yeah.
Probably that's most of the A waves, so we can
Do
bounce
you
a little bit
remember
more.
when platinum used to trade at a premium to gold? Or you're too young?
I may not be too young, but I may not have been paying attention to the platinum charts at the time.
Okay, because I mean, it used to be huge, like $1,000 premium. Now it's almost $1,000 discount, so
Right.
800. It's amazing to me.
But we do think I should start tracking a platinum to gold ratio chart, but we are pretty bullish long term and think that we're going to head up towards the 2800 region. So,
So this would
um,
be an outperformer compared to gold,
but I think the
at least.
timeframes are pretty different. So maybe
Okay.
they head closer to parity over the next couple of years, and then
Hmm.
when gold may reach that top sooner and start it
Hmm.
on its way down, and platinum holds that forward and gets one more push up, and then it's trading at a pretty, from there it goes to 3,000, and maybe gold's only getting a corrective bounce, back up from hitting a top of say 2,700, and it drops down closer to 2,200. Maybe it only bounces back to 2,400 when platinum heads up closer to 2,800, 3,000. So there you get that premium again.
Do you cover and can you share a view of the Dixie, or that's
Uh,
someone else?
I keep an eye on it. I do think we hit a pretty significant top in a number of different ways that you look at this
Right.
move back from 2008 on the dollar.
Yeah.
Either this is 1, 2, 3, 4, 5 up as a diagonal, and so even if that's long-term bullish on the dollar, then we should have just started a pretty significant ABC retrace.
Yeah.
And this is just the first move down. So I'm looking for a decent bounce here.
Yeah.
I'm not
Right.
sure the degree of this move. This might already be um, a primary degree already if the measured move from a normal bounce here takes us all the way down to the
Because that
cycle
break
degree.
from the high was pretty impulsive, right, Zach?
Yeah, I think it's hard not to count this as 5 waves down. And we can extend a little bit more first, but
Yeah.
This looks pretty proportionate to the initial drop.
Yeah.
And then even if this is a more significant top, you still have what looks like 5 waves down. So we'd be expecting a pretty decent bounce. And that decent bounce, could certainly put some pressure on things that are priced in dollar terms.
Okay.
We treat correlation, as a bad word over
Yeah.
at EWT, but there is certainly an effect of strength in the dollar to things that are priced in the dollar.
Yeah. I made a New Year's resolution never to make a trade based on a correlation. And my next breath, I was talking about the gold silver ratio. It's silver. It's a really tough paradigm to break. So that's a good rule to have, I believe. So
Right.
great presentation. What's this energy here,
This is
buddy?
oil, the
Okay.
crude futures.
Okay.
So I'm seeing crude. I was enjoying listening to was it Steve that came on?
Yeah.
And certainly this 83, 84 region is significant resistance, and if it breaks through there impulsively, then you could at least head up to 87.50 and then maybe up to that 93 level.
Yeah.
But Garrett and I are much more concerned about the picture and the energy structure. A lot of things do not look like they reached enough of a consolidation at the lows that they hit either in July or September. And the energy stocks in the XLE and XOP have held up better
They look
compared
like two
to,
different markets.
right, compared to oil itself.
Yeah.
But
Yeah.
we're not seeing the end of, when you zoom out here, you could certainly count an A wave down, a B wave up, and then a C wave complete with this as extension. But there's a little bit of lag and skew between USO and crude and WTI, and certainly some skew lately between the energy stocks, and those, a lot of those energy stocks, well, some of them might be trying to get a move up to nominal higher highs again. Most of them are holding what looks like a 1-2 start to a C wave to the downside off of November highs. So that's one of the ways that we're viewing oil here. I have this purple variant is really not an alt count. It's the same A, B, and C wave, just instead of counting it at the larger degree after 5 waves up, giving this the benefit of the doubt that it was just an extension of the third, and this ABC would be the purple 4, and then from there we'd be heading up probably the 150, 170, maybe even 200 region for crude oil.
Wow.
So we're not long-term bearish, but in the over the next few months, we would like to see this resistance hold and some weakness actually play out on the individual names and that energy sector, and give us some opportunity to pick up some of those things after the rest of this C wave.
Yeah, and you know what's great about this? If the count doesn't work out, you could always say skew you.
Exactly.
Anyway, Zach, great presentation. For people that are watching you live and then see the video, I know your Twitter handle is your name at Zach Manis.
At Zach Manis.
And your website where people could find you and
is
perhaps
ElliottWaveTrader.net.
Okay, ElliottWaveTrader.net, everybody. And Zach is great in his own right and has some very talented teammates as well. So check him out. Check him out. And I hope this is a great year for you, buddy.
Thank you. Thank you.
Maybe like your best year ever, and not just in the markets, but in all ways.
Thank you.
All right, buddy.
We have a bar mitzvah coming up. We're planning a trip to Israel, and we have a bar mitzvah.
Your son?
So, yes, my middle kid.
And you're going to Israel to do it. Oh, wow.
Well, it'll be in our community, but we're going to go to Israel for
to celebrate
for him to put on tefillin.
Oh, okay. Yeah, I remember. So I remember singing from the Torah. I learned my Haftorah on a record that I had to just keep picking up and scratching and putting the needle down again. How do kids learn it now? Well,
I'm sure you could have an audio file made, but Avi's actually training Jonah. And Avi came out of retirement to train his own kid, and I got him to stay for an encore to train Jonah. And Avi makes him use a cassette tape. We had to go on Amazon and find a cassette player to use the cassette tape that Avi made him.
Oh, well, much
and Sony doesn't make cassette players anymore, so you're getting some cheap off-brand that breaks. So we've gone through 3 of them already.
Well, much nachas for you and your family, Zach.
Thank you very much.
Congratulations.
Dale.
I remember I said today I was a man and I hadn't even reached puberty yet. So thank you for being with us, Zach, and sharing some great looks.
Absolutely. Thank you, Dale.
Appreciate it. Okay, right, Zach Manis, everybody. Check him out. He's a great follow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.